Hello and welcome to Market Shares. I'm your host, Tony Blodgett, and today I have the privilege of interviewing my friend Anton Stetner. You may have heard me quote his stats on this show in the past, but we have him live and in person, and we're going to talk about what's going on in the real estate market today, real estate, lending, statistics, the fears that might be going on, and we're just going to have a casual conversation. You know, me and Anton connect frequently over the phone to talk about what's going on in the market, and he's calling me to ask what's going on with mortgage because he's sharing that with the real estate community, and I'm calling him to find out what's going on in real estate, and I share that, you know, with my friends in the mortgage business. So this is a great opportunity for us to get together and share some information with you guys that I think is going to be very helpful. So Anton, welcome to the show.
Oh, thank you, sir. Thank you for having me.
Thank you. Well, just a little bit. Let's get people to know you a little bit.
Okay.
So you're a real estate agent. You run a team.
Yes, sir. Yep.
How long have you been selling real estate for?
I've been selling real estate since 2003.
Okay, so just getting going.
Just a couple years.
Perfect. And just out of curiosity, what got you into real estate? Was there?
I knew I always wanted to be an investor. I was working for a biotech. They got bought. I was jobless. Said, hey, babe, I'm going to go work in real estate for just a few months, learn to invest. And then I realized this was the best game ever invented, and I never went back.
Love it.
Yeah.
So I heard about you years ago. It seemed like you kind of found a niche in dealing with REO properties.
Yeah.
Talk about that a little bit.
Yeah, well, what really happened was we were dealing with new construction, and then all of a sudden it's 2007, and then the lights go out. New construction's gone, and then we started working for banks, doing builder-developper bailouts, figuring out where they were at. We started doing bunches of broker price opinions, and ended up working for 54 different financial institutions during the downturn.
Yeah. So in a market where a lot of people were struggling substantially, you seemed to find a way to, find the one bright spot. And
I got murdered in the beginning, and then we just figured it out and adapted to that changing market as we're starting to adapt today to a changing market. As things change, you just have to adapt. I happened just to get into it maybe a little bit earlier than most because new construction here in the Seattle Metro shut off before the resale market did. So I had to go find something new because there went a majority of my business.
Right, that makes sense.
Yeah.
The necessity is the mother of all invention.
100%, man.
I love it. Well, I want to stay on you for just another minute because the other thing that I know about you is you have become an investor, and
Yes, sir.
You are a real estate agent, but you also are constantly looking for opportunities. I see that you talk about development projects you're working on and all sorts of other things. So maybe just give a little glimpse into that market for people who, I know over the last couple of years, property flips and land development has been good. I mean, is it still good? What are you seeing in that arena?
Oh, phenomenal question. So basically, I was in the early 2000s, I worked for builders, developers, and investors because I wanted to learn what they did. I wanted to learn what they did, but I didn't want to spend all my own money. I didn't want to take a risk. So I basically figured out, okay, if I go help all these people make tens of millions of dollars, they're going to make me a bunch in commissions, and they're going to teach me what they did. So we started doing that, and of course got clobbered in 2007. So that was also another mother of the necessity, mother of invention situation, right? And then started doing that again. About 2010, we started flipping homes again. There was lots of inventory. There was just tons of things you could buy at that time. And right now, we don't flip as much just because inventory is so low. So mostly what we do right now is we build multifamily townhomes and then some small single-family projects. And because inventory has been so low, like one of the things we've been doing a lot of is manufactured homes. Inventory is really low, supply chains are broken, but I can get those faster, quicker, cheaper. So it's kind of an interesting dynamic of everything from spot lots with manufactured homes on them to hopefully on Monday, our 29-unit townhome project's going to close that we sold.
Oh, wow.
Yeah. Knock on wood.
Well, I love that. So it sounds like flips aren't as popular right now, but finding ways of, helping to create just affordable homes and things that will move quickly in this market.
I think I think flips are popular right now, but you have to have a consistent prospecting mechanism for you to be able to find a flip and then do it and then have the contractors lined up, of course, unless you're going to do the work yourself. We're having better luck in the permitting and doing of our own projects and then building of single families. I think as the market transitions, you'll see more flips become available. And then I think that long term, because there's very few people who know how to permit and get land ready, that's its own niche. And that's going to be its own niche. And then that small multifamily, small townhome is also going to be its own niche, because the national builders and developers, they can only go after 20 units and above. So for, their small guys or gals in the local area, in our local market, there's a spot underneath them that they can sneak into that you don't have to go play with corporate money.
Right.
Yeah.
All right. Well, find the opportunity and
find the opportunity.
I love it. All right. Well, let's transition a little bit and let's talk about this market that
Sure.
we're in today. Like I said, I actually quoted you a couple episodes ago because I thought it was very interesting that, at least on the mortgage side, there's a lot of fear
Sure.
about interest rates going up and a lot less business out
Yep.
there. And what you shared with me and what I shared with our viewers is that turns out while rates went up by 2 points, 200 basis points in rate, the number of homes under contract in our local market had doubled during that time.
Yeah.
So let's talk a little bit about what you're seeing today, because I remember back in 2018 and other times in the past where we've seen, rates jump up like this, it usually creates a pretty significant drag on demand for housing. So
yes.
Are you starting to see that yet?
Yes,
Do you
absolutely, 100%. So that change, it took away, how many of the buyers do you think we lost? Like what percent?
I mean, if I've been throwing around this 25,
Sure.
30%,
Sounds,
especially of first-time home buyers that
Yeah.
were right there on the cusp and now can't qualify, and with homes going up as quickly as they have, they're being priced out.
So 1 in 4 buyers left us, but there's still 75% of them there, which is a huge amount. So you haven't seen a slowdown in volume. You haven't seen a slowdown in units yet, but you're seeing that kind of rapid price growth. That's hit a ceiling, and that's pulling back slightly. So I did another talk actually earlier today, and I just opened up Google, right? And you start looking through the news because you're trying to figure out what's going on in the market. It's all negative.
Right.
Like it's all one giant clickbait, like the world's falling apart, we're going to war, recession imminent, and you're like, sort of, okay? And so I think there's a fear because of this change, right? Looking throughout Snohomish County, where we're sitting right now, there's been a minor change in some prices in some areas, okay? So let's just say maybe they pulled back a couple percent. All it is the market cooling off. It can't continue at the crazy frenzy where over there in Bellevue, there was something that made the news where someone literally $300,000 over asking price and then threw in a Tesla as earnest money. That's unsustainable. That's emotion.
Right.
So I think we're just, returning more towards a normal market. And a lot of our lenders and a lot of our brokers on my side, they haven't been in the industry a long time. So they don't remember, like, if we look over the last 20 years, like 30, 40 days on market, that's normal.
Right. Well, let me ask you this, because I do see, and I look at real estate, just doing my own searches online, just to keep my finger on the pulse a little bit. And I've also seen some stats that there's, more price reductions and things like this. Now, to me, that could mean two things. That could mean like, wow, the market's really soft, or it could mean that there's a number of brokers out there who have been being overly optimistic with their listing prices and are now having to come back to reality, because when the market's going like this, some people's strategy is, well, let's stay ahead of it and keep it going. And now, so maybe they were just too aggressive with their listing price, hoping that they would get it. And now it's like, okay, well, we shot for the moon, we didn't get it, so let's, right? I mean, is that?
I 100% agree. That is 100% a factor in it, because when the market was rapidly appreciating, most of everyone's broker strategy was, oh, I'm just going to price ahead of this market. Well, if that market then changed, it just never caught you, which means you had to do that price reduction. But it wasn't worth that to begin with.
Right. It seems to me the analogy that I heard from someone is that, we've been racing down the freeway at, 100 miles an hour. And it's not like, the market's came to a stop and then it's backing up. It's more like we've kind of hit some heavy traffic and we've slowed down.
Sure.
I think that's probably more likely what's happening. And even if we are in a traffic jam, we come to a stop for a period of time, I do not see a large reduction in home values. And let's talk about the reasons why it's, at least from your opinion.
Sure.
I've shared some of them on this show. What's your thought on home values in the future? Are they going to dip? If they are, how much? And if not, why not?
The how much question is, if you and I both knew that, we'd just go buy lotto tickets because we could guess the perfect numbers.
Right.
But joking aside, I think because you had 2 years, in the beginning of this year, unbelievable appreciation in the first few months. Last year was unbelievable double-digit appreciation. Some of that was just plain false. So you're going to lose some of that. Okay, well, how much is that? 5%? 10? I don't know. But some of it's going to come because a market moves just like the stock market. It goes up and it comes down a little bit and up and down. We want to think it moves in this flat linear fashion. That's just not real life.
Right.
So some of it was it going up and just kind of that FOMO, irrational exuberance, some emotional pressure from COVID because I was locked inside. So now I just got to do whatever it takes to get my dream property. And we're just pulling that out. So we're returning to a normal market, to a normal pricing strategy where lenders and agents, they've got to dig in. We got to get back to the fundamentals. We got to have these discussions, know our numbers, and be able to clearly articulate values.
So it's possible that if you're a homeowner and you purchased a home in the last year and you were in a bidding war or whatever, that in the short term you could see potentially the value of your home go down a little bit.
Why not?
I also would you agree that it's likely that if that happens, that the long-term trajectory is probably still that as long as you plan on being in this home for 3 to 5 years or more, it was probably still the best investment you could have made.
It was the absolute best investment you could have made.
Right.
So only market nerds will notice when it goes down 5 or 10%.
Because we're watching everything.
Yeah. So you're like watching, okay, what's going on? The average homeowner probably won't even notice.
Right.
The average buyer, unless they're like looking every day, they'll notice a little movement, but they won't notice it much. Long term in the Seattle metro where we're located, and to be honest, this is actually true for almost the vast majority of the whole country, we are behind on housing. And what happened is, if we just go back, because you mentioned, part of my early story was I was working for those builders and developers, and then we got into the 2008 financial crisis. Well, we didn't build homes on a local level, on a national level, 2008, 9, 10, 11, and it kind of started back up in 12. So there was about a 4-year gap where we were behind. The second problem that then came in is legislation for the development process. Wetland boundaries got bigger. The development process got longer. It got more costly. So part of that is just government regulation. And then the third part of it is financing for the builder or developer in the small guys and the big guys was so much easier prior to the financial meltdown.
Right.
Now their capital requirements for a construction project is literally 20 to 40% more than it was previous to that.
Wow.
So that's created stability, but we have not caught back up to population. So I don't know our national numbers. National numbers are something like 1.7 million units we're behind. In the Seattle metro, we're 128,000 units behind. We were just talking with Chicago Title, the builder services unit, and Mike Appleby said that we are producing in the Seattle metro right now 0.6 units for every one needed. So think about it like this. We're still making babies. People are still moving here because we have a phenomenal economy. So even if we lose this little piece of the top, right, and let's just say you lose 5 or 10%, it's going to immediately find a floor because of the lack of supply. There's not a tsunami of foreclosures coming. I still have connections in that industry. I get on, listen to those webinars. We still work for some of them. There's very little work coming.
Right.
There's not a bunch of notice of trustee sales coming, so that whole there's a tsunami coming because of COVID, that didn't happen.
Well, there's no forbearances. I mean, the forbearances have all been worked out.
Yes.
The very egregious workout plans of the past, those went away, and most servicers were very flexible, and there was some government intervention to make sure that, servicers worked with people in forbearance, and the forbearance numbers are negligible. I mean, it's a nothing burger. And also people have so much more equity in their homes right now. I mean, even if something does happen where you can't make your mortgage payment, worst case scenario, heaven forbid, you can sell your house and you're not going to go into foreclosure,
I got a notice today for a property that is in foreclosure. I looked it up. I pulled its notice of trustee sale, and I was like, man, we got to see if we can buy this or something. And I looked, and I was like, oh, dude, they have equity. Like, all they have to do is sell their house.
Right.
The house is worth $750,000, and even with what they were behind, it only totaled $485,000.
Yeah.
So that's just equity sitting there. But to kind of go back to what you and I were just talking about, what this downshift, the slowdown on the freeway, is us returning more to this normal market when days on market is sometimes a couple weeks to 30 days, where you get 7 to 10 showings, where maybe a buyer could make a contingent offer,
right,
or get a home inspection.
Oh yeah, right. An appraisal without having to waive the appraisal.
Yeah. No, 28,000 extra down, above the appraised value. We're just going back to that, and I do think we're going to take some type of a haircut. I don't know what that magic number is, but the fundamental underlying fact is you don't have enough supply to keep up with population. And they're not making it easier to build houses, and there's no extra funding coming to make it easier. So long-term, housing throughout the U.S. is just going to be more and more expensive. And then in our area, the Seattle Metro, we're just going to look like the Bay Area.
Yeah. It's going to get worse.
Yes.
Well, and the millennials aren't going away, and they still have a few more years of kind of to reach their peak. And even then, it's still going to be a lot of household creation, given the challenges that you mentioned with inventory and builders. And the other thing that I would say about builders is that builders have changed their appetite for risk.
100%. Yes. We got burned.
Yeah. So even, they're much more attuned to, days on market and these sorts of things. So this idea that the builders have the same mindset that we do, which is, hey, the demographics prove that they should just build, and it's going to all get absorbed. They don't have that same mentality, and they're going to pull back when there's a I would watch builder confidence. If there's a shift in builder 100%. Confidence, then be concerned about what's going to happen with inventory numbers, right?
Yeah. And I think you're actually already seeing builders pull back in our local market a little bit, because if you're looking at the MLS, you can see there's more pieces of vacant land coming on the market, and they're not getting snatched up as fast. Like, if I was to tell you what I think is a great land is a great buy in our market right now, if you can find a good piece of land at the right price. Long term, you can't go wrong with it.
Right. They're not making more dirt.
They're not making more dirt. They made one earth.
Well, awesome. Okay, let's talk a little bit about inventories. What are you seeing right now, this week, the last 2 weeks? Are you seeing more inventory?
Yes. So you're seeing a slight rise in inventory. We're still below a month of inventory. So,
but what were we?
We were at 2 to 3 weeks.
Okay.
And so, guys, remember, when we're talking about 2 to 3 weeks of inventory, that's all price ranges. That's the whole market. So that includes your $2 million home all the way down to, your starter $400,000. Which means if you're the average home buyer and you're buying right in the middle, if the market's got 2 to 3 weeks, there's hours right there.
Right. This is a really good point. So this actually comes up a lot, and is the price range of the homes make a big difference on what's going to pull back, right?
Yes.
So we always see that the luxury market is what pulls back first.
100%.
100%.
It's affordability.
And when you look at the numbers, it skews the numbers because there's such large dollar amounts. And we say there was price reduction of $300,000, but it's on a, $3 million home. But then you average that into the numbers, it looks like, it can really skew the numbers.
In Snohomish County, so I've been looking every Monday morning, the price reductions on single-family homes over the last 7 days, Monday morning, there was like 180 of them. It was 2 pages, okay? And it was just one line of 2 pages. 2/3 of it was over $1 million.
Okay, right.
There was a couple up here at the top that were in what you would consider the median prices or the affordable. And then of half of the ones that were in that, around the median, they'd already gone pending inspection. So in the last 7 days, they had a price drop and then they immediately got bought.
Yeah.
The more expensive homes, like you just said, they were having price reductions and they hadn't been purchased yet.
So these are the sort of things, and the reason I point it out is because when you look at headlines, when you look at news reports, they don't mention these details, right? But the reality is that if you're a first-time home buyer, or if even you already bought your first home, you've been in it for a while, your family's grown, you're bursting at the seams, and you're worried about, should I be moving up to that kind of mid-range affordable home? Look, it's still a great time to do that, in my opinion, because like Anton just said, this market, at least where we're at, it's only going to get worse in the long run. And owning real estate is a long-term investment. I mean, obviously we've talked about flips, and there's ways to time the market and make quick money in real estate. But for anyone who's a homeowner, this is a long-term buy and hold strategy. And I strongly believe that you're not going to get burned by this market. And then the other thing that I think we need to touch on before we wrap up.
So let's add a stat to that.
Okay.
The average person lives in their home 7 to 8 years.
Right.
Okay, it was 10, kind of came down a little bit from 10. The average recession in real estate lasts less than 3 years. It lasts like 2.5 years. They call it the 1,000 days. Okay? So if you look at that and you bought and we went into a recession, literally by the time your natural time cycle of you moving again, so unless you're a speculator or, forced job relocation, whatever it may be, you'd literally be in there through the recession and right back up the other side.
Right. Well, and look, and we don't have the speculators in this market. That's the other big thing. In 2008, people, I just laugh when people try to compare what's going on right now. They're like, man, this sure feels like 2007. I'm like, were you there? Because it's nothing like this.
Well, I mean, we had these mirrors. People that could fog them.
Yeah, exactly.
We sold them real estate.
Yeah, exactly. Yeah, they didn't even have to fog the mirror. We just gave them real estate. The one other aspect then is, let's just say that you go, man, Anton says we might see a pullback. We might not, but we might see a 5% pullback. I think I'm going to wait a little bit, and I'm going to wait out that 5%. The alternative is that you go rent. So what are you seeing in the rental market?
Well, there's a two side to what you just said to that question. So one, in the rental market, if 25% of the buyers can't buy, where are they going?
Right. They're going
right in the rental market. So if you think there was pressure on rents in the last 12 months, you haven't seen pressure yet. You're going to see above average pressure on rents because those buyers got pulled over into the rental market. I actually personally just raised one of ours $250 a month. That's the highest increase we've ever done because I looked and there was nothing that would have hit the range, so we just raised it. And the person just said, okay. Unfortunately, that's going to happen to everyone I'm going to go rent. Second, do you think the Fed's going to raise interest rates again?
Yes.
So the market might go down 5%, but I'd bet millions of dollars the Fed's going to raise interest rates.
Yeah, a couple more times.
So in that same time period, whatever we depreciate, if we even do, is probably going to be erased just by the rate increase during that same time period. In other words, it's just going to become more expensive. Yeah. So the buy now versus buy later, I know it sounds crazy and maybe counterintuitive. It's hurry up and buy now.
Yeah.
Before rates go up, before your rents go up. Lock that in, and if today's number doesn't look good, well, what about a 5.1 or 7.1?
Right.
You know, and we do know, historically speaking, as we get into a recession, which the Fed is trying to force us into one, what happens to interest rates?
Yeah, well, they're going to go down. There's no doubt about it. Well, and you know what's not going to go down is, you can't refinance your rent.
Correct.
Rents only go up.
Yes.
Yeah. I mean, there might be something that could cause rents to go down, but we know that there's a housing shortage in both the rental and the homeowner categories. And I think that, it is important. I know it's fearful for people, when they see the headlines.
Yes.
And I get why people are scared. But man, I would hate to see people just keep waiting, for a correction or for something to change.
Yeah.
When we know, just based on the big picture of everything, that rents are going to keep going up. That's not a great solution. We know that values long-term are going to keep going up. We know the demographics show us that there's not enough homes for the number of household creations. This is why, we're already seeing legislation. We just saw legislation proposed from the White House to allow more ADUs, to higher density.
Yes.
I mean, they know. I mean, they wouldn't even be talking about those things and this whole affordable housing issue if they didn't think it was going to keep going up, and they have no other way to control it. So you're going to see more high rise. You're going to see more, and I would argue that maybe they'll pull back a little bit on some of the regulations and make it easier to build. That would be nice.
It would be nice. I don't think that's going to happen.
No.
Ever.
No, probably not. It's going to keep getting harder. Well, hey, you guys, we're just close to a half hour here, and we try to keep these short, digestible. I'm definitely going to have Anton back because this is stuff that if you work in mortgage, you work in real estate, being a part of these conversations, you should be having them. It's important for guys like you and me to hop on the phone
100%.
every couple weeks and say, what are you seeing? What are you seeing? He shares it with his team. I share it with my team. You guys tuning into, a podcast episode like this, giving you talking points to talk to your clients, talk to your referral partners. It gives you something to say, hey, I was watching this show the other day. Yeah. And, we talk about prospecting. We talk about, lenders out meeting realtors out meeting clients.
Yep.
These are topics that you should be having with whomever it is that you're looking to do business with. And hopefully this has given you guys some bite-sized pieces to take away. And Anton, anything that we didn't cover today that you think is important for the audience to hear before we wrap?
I think just a simple script. If someone's saying as a buyer that I want to wait in today's market, get them thinking maybe a little different. You're always paying a mortgage. You're either paying your own or someone else's. And that's kind of this we have to start helping people think a little different. I think in the lending industry and then on the real estate side, all this is us getting back to the fundamentals of real estate. We've got to get back to our prospecting, back to our relationships. Be your local economist. Where is it going? Where are your jobs coming from? What's causing growth in your area? We have massive growth coming into our area. So long term, I think prices in a decade, you and I are going to be saying, man, I wish we would have bought more.
Right. Well, we'll end there, you guys. I appreciate you taking the time to watch this show, watch this episode. It's an episode. It's an episode. But feel free to please share it with your friends, especially the ones that are in real estate or mortgage. We'd love to like, subscribe, and we will see you on the next episode of Market Shares. Until then, take care and bye for now.